Welcome to Metals 100 coverage at the PDAC 2024 in Toronto, Canada. We have Rob McEwen here with us today. How are you doing, Rob?
I'm great. Thank you, Gilbert.
Good to see you. It's good to catch up. Last time we talked was about 2 years ago. I remember one of the themes that we talk about is actually copper. So are you still bullish on copper when you were 2 years ago?
More so. Copper is a large part of the value of McEwen Mining. What we did a few years ago, 2 years ago, we put the copper into a separate company and decided to finance it independently. And in the last 17 months, we've been able to raise just under 400 million US for that. And it's advancing to a feasibility study. And so I think the demand for copper is going to go up. It's used in all sorts of technologies for climate control, electric vehicles, construction, and there's a shortage, or there appears to be a shortage predicted in supply. So we're in a good position. We have a giant deposit, 37.6 billion pounds of copper. And when I put it on a gold equivalent, yes, I'll say it's equivalent to a 70 million ounce gold deposit. That's going to produce over 600,000 ounces a year of gold equivalent at a cost of under $600 an ounce. And in my book, that's a big, profitable property.
Great to hear. Let's talk a bit also on gold side, because gold has been one of the brightest spots last year in the commodities market. It's continued to go up now. It's over 2,100
yes.
already.
Yes,
so
over 2,100.
That's a good thing to talk about. So what do you think of the gold equities? Are they going to be able to catch up to the strong gold price?
Well, we had a barrier of $2,000, and now it's cleanly through that. If we stay above there, I think you'll see more investors looking at the gold market. There've been some good exploration stories like Snowline and a couple of others. Big grades, big intercepts. Well, not so much big grades, but big intercepts of good grade close to surface. And you've seen all sorts of excellent drill results coming out from a number of companies, but people haven't been moving. And as the price of gold goes up, I think you'll see a rotation from the seniors, intermediates, and down into the juniors. And then you'll get a huge amount of leverage in that space.
And before we talk more on the McEwen Mining side, I want to ask you, let's say, because you're experienced in running mining companies, what are the most, biggest challenge that running as a mining company nowadays? Is it geopolitical, jurisdiction, permitting, all sorts of different risks? What are the biggest challenge in running a mining company?
Well, it depends the challenges depend on where you're located. If you're in Canada, you have the uncertainty of dealing with the Indigenous. You have uncertainty about the time to get approvals. You're seeing cost push in all of the consumable items you use in mining. And then you had the capital markets. I mean, you go around here and talk to a lot of people and they say, well, there's not any money available for building the companies. And I'd say that a number of the doors you used to go through looking for capital have either closed or disappeared. So the mining industry has to go out and look for new doors to go through. And I think they'll find a good deal of money out there, but we have to, as an industry, shift in a way that we start changing the perception of mining held by the general public. So we have to look to be paying more attention to climate change and steps to reduce our carbon, our water usage. And we just have to shift that way. But I think if we shift that way, there's a lot of money to be found. The impact and investment funds, one of the market measurement firms, Morningstar, estimated there was over 2.2 trillion, not billion, trillion dollars in these funds. And that's a group that I think we should all be looking to go after.
So you talk about ESG. At that point, has McEwen Mining itself spent conscious effort in improving on that, and how do you, as a mining company, to help on that side?
Well, I'd say McEwen Mining has some older mines, and it's harder to retrofit an older mine to comply with the new restrictions. It's just more work and more money. But our copper project is very much there into the future. It'll be 100% powered by renewable energy. It will be emitting 1/3 the carbon initially. It will be using less than 1/4 of the water, and much lighter on the environment. And I guess one of the other issues facing the industry is a shrinking pool of labor. Over the course of the last 30, 40 years, enrollment in schools of mining and mining engineering and geology, the numbers have dropped precipitously. So in the US from 1970 to today, it's dropped about 85%. And it's dropped about 65% in Canada. So we are at a point where we're going to need more minerals to control climate change. And that means we have to have more mines. But there's fewer people in the industry and coming through the schools to come into the industry. So there is a real crunch on labor right now. And it'd be a good place for anyone coming out of school to be thinking about going into the mining industry. Because of this shortage, there's not as much competition for jobs. And two, you could rise to the executive ranks a lot faster than trying to get into a tech company or a financial company.
For all the talents out there, so you hear what Rob has to say. So let's talk more on McEwen Mining. So last year, your share price had a bit of a correction, but this year probably a good sign so far. Maybe you can talk a bit about what happened and how's your results coming along.
I'll go back more than 1 year.
Sure.
The past 3 years I refer to as the road to hell. Our share price dropped, our operations gave guidance and they never made it. 3 years in a row, and we were punished brutally in the market. Our share price dropped. It started turning around, and the inflection point would have been September of 22. And all of a sudden we saw the operations starting to get closer to guidance. This past year, 23, we delivered on our guidance. I went, hallelujah, finally. And then the costs, so we got the gold that we said we were going to do, but the costs are just a little bit higher than I want. So we got to pull those down. But we were able to, our year-end numbers, we went from a negative working capital to a positive working capital, significantly more. We reduced our debt by 38%. As I mentioned before this interview, our earnings, well, we had net income of $1.15 a share, 55 million, as opposed to 2022, where we had a loss of $1.71 a share and 80 million in net loss. So there's been a big turnaround there. And we've also, we separated our copper and financed it independently. I don't know if I mentioned it, but we raised $400 million in the last 17 months. And we have the second largest mining company in the world, Rio Tinto, as a shareholder in our copper, and the fourth largest car manufacturer in the world for our copper. And that they invest, Stellantis, they were the first car company to invest directly into a copper project. So that added a lot of credibility to our deposit. And that's contributing to our share rise. So from September 2022 to now, or yesterday, our share price was up 131%. We outperformed the Dow, the NASDAQ, GDX, GDXJ, and by a large margin of 3, 4, 5 times.
So it's a good times now. So what would be your outlook for this year in 2024 from McEwen Mining?
Production will be about the same as last year, a little bit less. Costs slightly higher. We have development projects at our Timmins operation. We're building a ramp, and there'll be a new source of production that won't have the transportation that our current source has. So there's a savings of $10 a ton. We get rid of paying a royalty or a stream because there isn't one on this property. I mean, we were selling, the previous owners of this property put a royalty and a stream on, and they committed to sell their gold at $600 an ounce. So right now you're losing $1,600 of benefit, opportunity cost. And that's one of my big complaints about the industry, is that people running companies, I don't think they ever took math in high school, because they're willing to sell royalties and streams, and they've given away their profit margin and the ability to withstand drops in the gold price. I think from an investor standpoint, the royalties and the streams were a nice business because you didn't have to worry about management screwing up. You didn't have to worry about the government coming along and doing something silly. You didn't have to worry about unions. You didn't have to worry about the environment. You just took the gold. And the industry was so quick to say, this looks like easy money. I don't have to work for it. It's not dilutive. But it destroyed the profitability. And you can see it very clearly when you look at the performance of the streams and the royalty companies as opposed to the producers. There's a huge divergence in value and share performance. So we're going to get rid of all that. And so the Timmins operation should be lower cost as a result of that. We are going to be building a new plant in Mexico, the current operations, care and maintenance. In Nevada, we're doing some more exploration, and hopefully you'll find, the mother lode down the road from Cortez.
So a lot more to look forward to, indeed.
Absolutely. Yes.
Yeah, thank you for your time, Rob, for sharing your update with us here today.
Thank you, Gilbert. My pleasure.
Yes, thank you.